चिया पिउनु पर्यो सुरु
दिदी ह्याप्पी तिहार
थ्याङ्क यू छ हालखबर तिम्रो
ठिकै छ दिदी
हो ल ल अनि तिहार रमाइलो मनाएछौ है फोटोहरू हेर्दै रमाइलो एकदम राम्रो होइन रमाइलो गर्नुपर्छ त्यसरी नै हो नि त त्यही त मिस नेपालबाट आएपछि यहाँ पनि त्यसरी रमाइलो गर्नु भनेको आफन्तीहरू भएको राम्रो हो के
त्यही त
आफ्नो रहेछन् होइन हाम्रो चाहिँ अब कोही पनि खास कोही छैन अनि त्यही भएर खास त्यस्तो केही मनाएन
हजुरको दाईहरू सबै दाई भाइ नेपालमै हुनुहुन्छ
सबैजना
ए तपाईँहरू त कति लक्की हो कि अमरिनहरू सबै त्यही हुनुहुँदो रहेछ है गेट टुगेदर गर्नु भएर चाहिँ मैले फोटो हेर्थेँ कस्तो रमाइलो सब क्यानबेरामै हुनुहुँदो रहेछ है त्यही हो कस्तो मिल्यो ठ्याक्कै मिल्ने कि सबैजना त्यही नजिकै है
तिनीहरूको चाहिँ पर्सपेक्टलाई मैले गरिदिइरहेको छु भनौँ न मैले हो त्यही त
भनेको त अब आइडियाजहरू सेयर गर्नुभयो होइन नजिक भएर
त्यही भएर अहिले जुममा चाहिँ हामी चाहिँ जुमबाट चाहिँ गर्न मिल्छ हामी जुमबाट गर्ने त्यही भएर जुममा पनि भइराख्ने एभ्रिडे त्यो चाहिँ हो त्यो मान्छेले के हो यो उसमा जोइन गर्ने भयो मिलेन रे
हाम्रा नयाँ पार्टी अलिक कति भ्याउनु भयो भनेर चाहिँ सोध्नुपर्छ किनकि यो कन्सेप्टहरू भनेको अब सबै बेसिक कुराहरू प्याटर्नसम्म चाहिँ पुग्नुपर्छ किनकि यो कन्सेप्ट बुझ्नलाई चाहिँ तर सिम्पल यो यति चार्टमा आइडेन्टिफाई गर्न सक्यो भने चाहिँ फाइदा हुन्छ पछिलाई
एकदमै हो के अरे यो भाइ के अरे यो जस्तै म अर्को जुममा छु होइन लिङ्क पठाएको लिङ्कमा मान्छे जोइन गर्न मिलेन किन
मिलेन
त्यो स्क्रिनसट पठाएछ होइन के अरे होस्ट इज इन अनदर मिटिङ भन्छ अरे होइन
हजुर किनकि हजुर जुन आइडीबाट त्यता जुम खोल्नु भएछ नि मेबी त्यो आइडीबाट तपाईँ यताको मिटिङ जोइन गर्नु भएको भएर हो कि
होइन यताको मिटिङ मेरो छुट्टै हो होइन यताको चाहिँ छुट्टै लिङ्क दिएको थिएँ मैले होइन तर त्यो मान्छे खै ओके त्यो मान्छेले मलाई त्यसको लिङ्क दिएछ मलाई ठिक छ म तिमीलाई मैले छोडिदिएँ त्यो मान्छेलाई एकछिन प्रेजेन्ट गरेर म एकछिनमा आएँ है त भाइ म्युट गर्छु है धेरै बेर लाग्दैन 15 मिनट 20 मिनट भ्याइदिन्छु
त्यही त हो यार ब्यालेन्स राख्नु पर्ने मैले उल्टो भएछ Welcome, guys. Welcome to the 7 p.m. session.
Today call. I forgot.
Let's wait for some more people. Okay. I hope last week you guys took this Euro JPY and it went awesome. 1 to 4x reward. My objective is to just increase the risk to reward ratio, because the risk to reward will help us Risk to reward will help us to be in the game for a longer period of time, because we need more bigger risk to reward, like 1 to 4, 1 to 5. You don't have to win all your trades. You just win your 30% of your trade, and still you are in the profit, because we don't know, because all the trades might not hit the TP. Some will hit the stop loss, some will go in losses. But due to this insane risk to reward, like 4 to 1 to 5, like 17 pips stop loss, which is very lower. Okay, when you have 17 pips stop loss, you can put your lot size like 0.02, because when you lose 17 pips, that will become how many? How much? 3.4. Still, when you are playing 0.01 for 40 pips of stop loss, you are risking your $4. But when you have your risk to reward very less, you can literally do with 0.02 for $100 account. But when you have stop loss greater than 30 pips, then you should stick on 0.01. Okay, for greater stop loss bigger than 30 pips, 0.01. For smaller stop loss less than 20 pips, 0.02. That's all risk management, guys. Risk management. This is how you manage your risks. This is how you grow your account day by day. Not try to win every trade, just win lesser trade. And again, when you win lesser trade, also you are in your profit, because your risk to reward was 1 to 4. That means you are risking 1% to gain 4%. Just a second. All right, now just text it. I think we are all here. That's it. No worries. I'll pause the music off. So today, what are we going to deal with? I'll just go through all those pairs, because right now it's 7 p.m. London market is open. This is no trade setup for this. We could have entered here, but still we could have collected this 50% of this down candle. Oh, okay. What is happening here? GBP NZD making move, already making move. GBP NZD made move in the morning. GBP CAD, GBGJ, GEG. That's okay. USD pairs. Let's go quickly to USD pairs. No any trade setups, because every time we want to trade, we need to make a plan. Okay, we have to make a plan and we execute our plan. That is why it is said that we plan our trades and we trade our plan. That's so simple. Still, we are at the beginning phase. You don't need to do by your own. We have copy paste system. We can copy and paste. Okay, and you want to copy and paste and make some money with proper risk management. Okay, let's get back to today's lesson. First of all, I would like to ask you guys, what videos have you watched this week, or where have you reached? I just want to know a little bit quick, follow up about learning. Where have you reached in your academy, or if you are following Manny Quinones bootcamp, where have you reached? Can you please tell me? You can unmute yourself and tell me which video section have you reached?
Vivid, I watched Bootcamp 3
Mm-hmm.
about risk management, where they say you can move your SL to entry point.
Yeah.
Something like that. Yeah, I'm on that video. I know I'm very slow learner.
No problem, Mira. No problem. We all have our own pace. Don't worry about it. Just believe in you. You will learn slowly, but obviously you will get it there. Okay. So don't worry about I'm being slow or my friend is learning faster than me. Don't worry about that because this is a long-term game, and here we are not in the race. This is not a race. We just maintain our own pace. Okay.
Yeah.
All right. So no problem. So do you have any questions regarding those? What have you learned till now? Do you have any?
You know the Vibrata, is it on TradeView or is it on IM Academy? You have to buy on that.
You have to buy on the IM, for the Vibrata. Also, if you have attended those sessions, you can turn on your Ichimoku Cloud. The
on
indicator.
tradeview.com.
Yeah, the indicator you can put
It's
your.
a similar software like Vibrata.
Yeah. But what Bibrata does, Bibrata will give you the list of those what to buy, what to sell. But here
Okay.
you have to find on your own. You have to literally go to each pair, so that you need to check. Okay, this is my information. Red and blue crossing outside the cloud. Okay, done.
Yes. Yeah.
The green pointing down. Okay, done. The enterprise 10 pips away from the cloud. Done. Then you enter the market.
So it's the same criteria. Those 4 points I can use on the
Yeah, the same.
tradeview.com.
It has the same criteria because we are using the similar indicators. Where you put conversion line 6, baseline 13, lagging span 26, displacement 13. But what is given in Vibrata is they are giving the software is giving you what to check, which pair to check. Okay. But in this software, uh, in this tradingview.com, you just need to go and find out your own pairs.
So
That's
I have to calculate everything itself. Okay.
Yeah, we need to find our own pairs, and we need to check on that. That's all same. Okay.
Okay. Thank you.
No worries. Yeah. So, any more questions?
No, it's okay. Thank you.
All right. JP, bye. I just need to ask you some questions regarding where have you reached. A little bit of follow-up because we need all the people to be in the same page, okay? So that we can go in the same way, because we don't want someone to go fast. We don't want someone to be back. We just want to keep same pace so that everyone can catch up. Okay. So today I am going to talk about a little bit new things, but that's not very big new things. That's a simple. This is a simple thing, okay? Don't worry about it. You will just see this kind of thing in the market, and when you see this kind of thing in the market, you need to focus your all the views on that. you need to focus when you see this kind of thing in the market, because these all can occur in the market when you are buying and selling. This can help you to know, this can give you the answer to that question, that why I am buying this, why I am buying this at this point, why I am selling this. Okay, this all goes to the point of interest, which is also known as POI. So the point of interest, because when our in our life charts we mark up our point of interest. Okay, simple. uh, if we want to trade on the naked chart, then we need to mark up our point of interest. So this, I identifying these will help you, to make your chart little bit less messy, because when you begin to draw everything on the chart, your chart can be a little bit messy, and sometimes you might get lost inside your drawings. So this point of interest will help you to identify which price level to focus on, which zone you need to be taking care of. Okay, so there are three kind of point of interest. One is institutional candle. Okay, institutional candle, price accumulation, and imbalance zone. So there might be questions. So why is this three things are the point of interest? So whenever you see the institutional candle, price accumulation, and imbalance zone, these serve as a magnet. Okay, like a magnet in the market. Whenever the market makes these kind of patterns, the market tends to come back to that similar zone, and it will give you your entry point. Okay, sometimes you can mark this point of interest as a target for your take profit, where to take partials. Okay, this target can help you identify your take profit zone, and it can literally help in your trade management. So let's get into the details. So what is the institutional candle? Do you have any idea, guys? What does the institutional candle look alike? Anyone can tell me? If you know, you can just tell me, or you can just drop in the chat box. Don't be shy, because this session needs to be little bit interactive, so that we can go hand on hand. Okay, so all right, Miraji, no problem. See you later. Okay, take care. Thank you for coming. That's all right. Thank you for coming. And so this session will be recorded and will be posted. You can catch up anytime. Okay, so okay, family, so anyone knows what is an institutional looks like? Alrighty. Okay, let me make it clear. Okay, all right. Nope. Okay, no worries, Abdul Bhai. So the institutional candle will be the big candle in the market. You can see the institutional candle like it's in engulfing candle. Okay, engulfing candle, Morobuzu candle, tweezer top and tweezer bottom. So those are our institutional candle, and those are also our point of interest in terms of candle. Okay, so but don't be confused that whenever you see this kind of candle you are going to buy or sell. That doesn't happen. Okay, because I have seen many people They are taking trades just by seeing the candle on the daily, on the monthly. When they see monthly candle red, they are selling. When they see weekly, daily candle blue, they are buying. That's not how it goes. We just have to take these candles as a reference. Okay. So institutional candle are those big candles which occurs in the market. Okay, those they are also called the banking candles. To you know what, to move the market by a pip, you need a lot of money, that needs to pour into the market. So who have those money? Obviously the banks, obviously the institute, they will have that money. They will have their lot size like 100,000 lot size, 1 million lot size, 10 million lot size, 20 million lot size. But what are we dealing with? We are just dealing with 0.01, 0.02. But the bank, they have their 1 million lot size. When they put 1 million lot size on sale, the market will move by literally 1 or 2 pip. Literally only 1 or 2 pip. That means the bank are pouring millions of money in the market by putting the lot size, very big lot size, millions lot size. Okay. So when the bank move the market, they will give you the sign. They will give you the tracks. They will give you the sign like, okay, whenever you see this in engulfing candle, then you will be clear that okay, bank have taken over the market. Now they are moving. Okay, all the time. What are we doing? We are the retail traders. And what do we want to do? We don't want to go against the trend. And who are the trend makers? Who are the market makers? The bank, the institutions, the hedge funds. Those are the market makers. And whenever the market makers move, they move heavily. Okay, they move heavily, very heavily, knocking out your stop loss, taking you out from the trade. They are always targeting your stop loss. They are always targeting those liquidity zones. That's where the institutional candle comes up. So whenever you see those institutional candle, you mark up your chart like, okay, this is my point of interest institutional candle, 1 hour institutional candle, 4-hour institutional candle. Basically the institutional candle are seen in 4 hours and 1 hours where you mark your institutional candle. But you know what, the market works in fractal. That means whatever happened in 1 minute, that happened in the 1 month chart. That is why whatever happens in 5 minutes, 10 minutes, 15 minutes, that happens in all the time frames. So whenever you have all those time frames, they are moving hand on hand. Like whenever you're all the time frames, they are saying you, okay, this is the buying market. That is your trade. This is my trading demo. Okay, internet connection is unstable. Let the internet. All right. So the banks, institutions, whenever they move the market, they will this kind of candle will appear. Okay. The engulfing candle, more bullish candle, tweezer top, tweezer bottom. Right now, these two candle, these two zone, these are the engulfing candle. Whenever the bearish candle is bigger in volume and the wick, including the wick, whenever the bearish candle is bigger than the bull candle, that is called the bearish engulfing. Likewise, vice versa, whenever the bull candle is bigger than the red candle in volume and the wick, then that is the bullish engulfing. Do you guys get it?
What do you mean by engulfing?
Yeah, engulfing means this red candle in the bearish engulfing. The red candle has engulfed. Engulfed means it it is bigger than this candle, and it has covered the the body and the wicks. Whenever the one candle is bigger than the body and the wicks of the previous candle, that means see when you put this candle of okay, how can I take this? Select button, select. Oh, wait, just look at this. Can you see the blue? Right now you can see, yeah. Now can you see the blue candle or not?
No, yes, I understood that. Now,
Okay.
what does that mean to us? Is that mean it is going into the seller market, or is it going into buyer's market?
Great. Nice question. That's obviously when you see the bearish engulfing candle, the market is the bias of the market is on the sell side. Okay, that is just one indication that okay, the market sentiment can go short. That means the market sentiment wants to go in the sell market. That is when we have our bearish engulfing candle. But whenever you see the bearish engulfing candle, that is not indication you to sell. Okay, that is not the indication to jump in the trade by sell. Okay, you need another confirmation before you sell when you see the bearish or bullish engulfing. Whenever there is bullish engulfing, that is only the indication, that is only the sentiment, that is only the when you are seeing okay bullish engulfing, okay, the market can go and buy. But the question will arise, when can I enter the market whenever I see this kind of engulfing candle? Let me give you a quick hint. Okay, all right, so whenever you see bearish, that means going down, you will see the retracement means pullback. Okay, every time when we are entering the market, we are entering on the pullback. So whenever you see the bearish engulfing candle open here, open high low close, and you will be seeing like this, retrace to 50% and come down. So this is your point where you enter the market. Every time this is your one checklist for entering the market. That is why we always say that the market, we need patience. We need a lot of patience in the market. When if you don't see the retracement in the bearish engulfing, then that means your checklist is not checked. That means you are not going to jump in the market. Okay, whenever we see bearish engulfing, or whenever you see bullish going up, retrace to 50% and go up, the market will do like this. This is the valid entry. Whenever you enter here, you will have your stop loss right below here. Stop loss right below here for the buy. The sell, your stop loss will be right above this candle.
So
yeah.
So in the second feeder, you put that this is the right place to enter. It will retest for 50%, and then it goes up. So that is what is the that point. So what is the time frame we need to look at? Is it 15 minutes time frame, or is it 1 hour time frame we need to look at that point?
All right. Nice question. You know what should we do? Okay, let us consider this is 4-hour candle. Okay, that means for the whole candle you need 4 hour to get formed, and for the retracement you need to wait for the next 4 hours. Okay, whenever you see in this kind of candle in 4 hours, you jump into the 1 hour candle. Okay, or what can you do? Take your fib retracement, okay? Take your fib retracement from the high of the candle to the low of the candle. Drop your fib retracement and you see the 50%. Okay, it is not showing. Oh, let me just quickly fix it up. You can see here 50%. The 50%.
Yeah.
This
618.
50%. Okay.
Yeah.
Yeah. 618 is the golden pocket ratio or the golden ratio, but your optimal entry will be 50% because that is your fair value gap. That is your fair value gap, and that is your optimal price. This is the buyers. Okay, this is the buyer. This is the bias. Okay, from down low to high. Your 50% will be here. This is a 50% zone. This is your discounted price. The another key term for 50% is one is BG, that means fair value gap, or this discounted price, because you know when the price is up and when do you want to buy any product. Let's see, whenever you have one Nike shoes that is on $100, and you think, okay, $100 is big for me, but the next day you will get 50% discount on that Nike shoes. Will you be buying that shoes or not?
Yeah, definitely. Yeah. So when
Yes,
we get the discount.
exactly. So this is the 50% discount rate. Okay. So whenever the bank are moving the market, they will move abruptly, stopping out those sellers on the sell side. They will stop out those sellers, and the market will come back to 50% or your premium price. Okay, the next price is the premium price. The premium price will lie on, say, 71% and 78.6%. You can jump in the 50%, okay, or you can wait for the price to come in the 71% or 78.6%. That is the premium price. And whenever the price come here, you will take out a long position. You can put it in 50%. You can see this is 1-to-1 ratio. That means you are risking 42 pips to get whatever. Okay, but whenever you wait for your price to come back to 71 or 78%, look how the risk to reward will be. The risk to reward ratio will be 4-to-1. This is the main concept which I am, making the charts, making my marking up. I want to jump in the market on this zone, 71% or 78.6, where I can get a very nice price with very less, pips of, risking less pips to get more. That means risk to reward is immensely high, and the risk to reward will help you grow your account in the long run. So did you get it right?
Yeah, I got it. Thank you. Yeah. So that means
Yeah.
to say this is a 4-hour candle.
Yeah.
You need to keep monitoring the following candle, because now the current one is blue, right?
Yeah.
When the next 4-hour candle, when you are watching, that will be blue color one will be going up and down, up and down. So you need to wait for that to come to that particular point.
You will get like this, and this will be your red candle.
Yeah.
And boom, you will enter here, and your market can go up. Okay. And this is your
that is the prediction, right? We predict that way. It will come on.
This is the prediction, because all the time the market come back to the 50% or 71%. The market, most of the time the market will go up. That is why we are very less, we are risking very less pips. You can see that you are sometimes you are risking 30 pips, 40 pips, yeah.
Yeah.
But here, what are you doing? You are risking just 20 pips to gain 100 pips, to gain 120 pips. How good is that?
Yeah,
Yeah.
got it. Yeah.
All right. So that was the concept for the bearish and bullish engulfing. That is the concept of engulfing candle. Welcome back, Miraji. Uh, this was a really intense session. I loved it. I want this kind of interaction, so that we can be clearer on whatever we are doing. I want to make sure that you are clear in the topic. So this was our entry point. Whenever you see the bullish or bearish engulfing candle, you enter in the 50% retracement, the pullback 50%, or you can get in the 71 or 78%, which is the premium price. And if you have DeLorean pack, then you will hear about the Patrick push. The Patrick push is also same concept like this. The Patrick push, the Patrick tells that whenever the engulfing candle comes up, there can be the 50% retrace. That is the Patrick push. Whenever the 50% retracement is done, the market can come to your direction. But whenever it doesn't want to come to your direction, it can break that zone and go to the opposite direction. That is why we have risk management in place, because we may not be 100% right every time, but with this concept, what I am focusing, what I am going to focus in my sessions all the time, is that we don't need to win 100% of trade. Even we don't need to win 50% of trade. We just need to win 35% of trade, and even we are in the profit side. That is what will make us the independent trader in the long run, because you will learn through your mistakes. Okay, you will learn through your mistakes. Whenever you do mistake, you learn through them. You never get you never get demotivated. You never get down. Okay, don't get the feeling down. Just learn through your mistakes, because no one is perfect in the market. Everyone make mistakes, and we need to we need to see whatever we are doing wrong, we need to make it right in the next step. So this was our engulfing candle. Okay, engulfing candle. I want to go for more content. Two is the top and two is the bottom. Let's go to the Marubozu candle. Okay, quickly. Miraji might be confused on the engulfing candle. Okay, let me see in the chats. Thank you. Okay, again, Miraji, the engulfing candle are the candle. Whenever you see, for the bearish engulfing, that means whenever you see the volume of the bearish candle, you can see the bearish candle can cover the whole blue candle. That means your bearish engulfing. You can see whenever you see the bullish, you can see the bullish will engulf the candle, the previous candle. So that is bullish engulfing. And whenever you see this candle, you will try to enter the market on the 50% retracement of the candle. Okay, always the market will come back to the 50% zone, which is also called the fair value gap, or the discounted price. Okay, because everyone like to buy the things on the discounted price. So that is how the fair value gap works. And the premium discounted price will be 71% and 78.6, which is also a very good entry, and that that will help us to to have nice entry, and our risk to reward ratio will also become very high for that. Okay, so let's go to the Morubuzu candle, the Morubuzu candle. Okay, the Morubuzu candle. So every time, you guys know, let me get here. So every time the candle forms up, the price will open in one place. Okay, like I am going to make a bullish Morubuzu. Okay, the price will open in one place, like here the price will open in 0.5372. the price goes up. Okay, the price goes up. Let me take the wick. Okay, like here, let us consider price opens, the market opens here and goes up and came down and make little bit of wick, or it doesn't make any wicks. Okay, the Morubuzu candle, the bullish Morubuzu, we are talking about the bullish Morubuzu. I think this is the right.
Sorry, Divit bhai, we can't see your screen.
Really? Stop, sir. It is how it happened.
Oh yeah,
Can you see?
sorry. I was on the wrong window. Sorry.
Okay. So the next institutional candle is the Morubuzu candle. For the bullish Morubuzu, you know what will happen? The market will open in one price, and the market will go straight up, make a big candle, and come back and close here. So you can see there will be a little bit wick on the top side for the bullish, or no wick. Okay, little to non wick in the top side is for the bullish Morubuzu candle. If you can see the little wick on the top, that's fine, but you should not see any wick in the bottom. Okay, there should not be any wick in the bottom for the Morubuzu candle. That means, what does this kind of candle means? That it has largest volume. Okay, the very high volume. So who is responsible for this high volume in the market? Obviously the banks, obviously the institution. That is why we have the institutional candle. The bullish Morubuzu is also the institutional candle. Okay, that is why we have little to no wick on the top side, and there will be no wick on the bottom. Okay, whenever you see the wick on the bottom, then that doesn't count on the bullish Morubuzu. This won't make it the bullish Morubuzu, but this can make the bullish engulfing. For the bullish engulfing, that is fine. But for the Morubuzu, there should not be any wick on the bottom side. For the bullish and for the bearish, the price will open on the high and it will come on the low. Okay, similar way. There can be little to no wick on the bottom side, right opposite to the bullish, or there can be little wick, and on the top side there should not be any wick. That means, what is that means? That means the large institutions had played their game by putting a lot of pressure on the sell side, pouring a lot of money. This is what the money move. Okay, this is the indication, clear indication of money coming into the market. That is why we are always saying that forex market is $6 trillion a market. That is why the forex is the $6 trillion a market. So who have those $6 trillion? Not us. We don't have even $100 in our account. Who have this money? Obviously, the banks, the institutions, the hedge funds, they will have billions of money, so that they can pour all the money in the forex market. They make the market. Okay, saying we want to trade with the banks. We want to trade along the banks. We don't want to trade against them. If we want to trade against them, then that is our downfall. Okay, so this is the bearish Murbuzu.
Sorry, Vivid bhai. No, in this case, whatever Morobozu.
Yeah.
So when we see that type of candle,
yep,
where can we enter into the market? Anywhere?
No,
we still
very right question. Very brilliant question. Thank you, JP Bhai. The same case and the bullish and bearish in engulfing. The same case also works on these bullish and bearish Murbuzu candle. Okay, but what will happen? What will happen in the bearish and bullish Murbuzu candle? You may not get chance to enter right on the second or third candle, because whenever you see this kind of candle, the market will move, will go straight down, will move straight away. Okay, will move straight away. Boom, next move. You could have waited for 5 days, 6 days, 12 days, 20 days, but that's okay. You don't want to get in the market on the first move. That's because the first move is always inducing us. The first move is always inducing the retailers, the retail traders like us, because I might get market in here. You might get in market in here. Sabidi can get in the market in here. Okay, depending on when you see this kind of candle, and by seeing those candles, you are feeling like, okay, my God, the market is going down. My market is going down. I need to catch this. But never forget that we cannot catch the market. Okay, no one ever can catch the market. That is why we wait. That is why we wait until the market come to the 50% of those money making move. The money, where the candle, the money making candle, we need to wait for the retracement to the candle and come down again. That's the case. You don't jump straight away, because whenever you see the bullish and bearish Morobozu candle, the market will give you immense momentum to the downside for the bearish and to the upside for the bullish. That is how the market moves. That induces the buyers and sellers all the time. Okay, so hope you got your answer, JP Bhai. Is it good? Are you good?
Yeah, I got that. So that means to say the institutions will be pushing the market down in this case.
Yeah.
And we need to wait for that retrace quote, whatever you said. So
yeah,
come back to 50% and then
definitely, yeah.
Okay.
Good. So, okay, guys. So this was our bullish and bearish Morobozu candle. Okay, that is bullish, and the next one is tweezer top and tweezer bottom. So when will you see this kind of tweezer top? That tweezer top. Let me go to the tweezer top. Okay. Let me delete this. Delete. always the tweezer top and tweezer bottom candle will appear in the top and bottom of the trend. Okay, like the top and bottom means like here, like top, like here, tweezer top, tweezer bottom, tweezer top, tweezer bottom, like this. You will see the tweezer top and tweezer bottom in those places. All right. Okay. So let's see what the tweezer top and tweezer bottom candle means. Okay, the tweezer top. Let's go. The tweezer top and tweezer bottom candle, basically they have the equal volume. Okay, the equal volume. Basically they will have the equal volume. That is why they are the tweezer top and tweezer bottom. Equal volume like this. Okay, this is the bull candle. Okay, this can be considered as the tweezer bottom, tweezer top. Sorry, this kind of candle appear in the tweezer top, similar volume with wick. Okay, similar wick. So this kind of candle, whenever you see this kind of candle, that is the tweezer top and tweezer bottom. This is also a point of interest. Okay, whenever you see this kind of candle on the top and bottom, you will mark it up. Again, the market will come up to the 50% or 71.8% of whole move, and you can into the market. We always into the market on the retracement, because every time the bank make the move, the bank will create loan, which we are going to talk about next topic. Imbalance zone is the next topic. Okay, whenever you see this kind of thing, the market will come down, retrace, and boom, come down. For similar, okay, where is my in-body scale? Okay, so this is the example for the tweezer, or is it? Boom, no, market doesn't change the scale. Boom, okay, it doesn't work like that. That's fine. Okay, the similar case, tweezer top and now the tweezer bottom, the similar kind of candle, but this kind of, okay, what is the red? All right, so tweezer bottom and tweezer top, these are also the reversal pattern. Okay, these all I am talking about, these bearish engulfing, tweezer top, bearish Murubozu. These are the main reversal candlestick pattern. You can learn about the candlestick pattern on the Manny Quinones Bootcamp number 8 course. And there you can learn a lot of candlestick characteristic, like what is morning star, evening star, tweezer top, tweezer bottom, bullish, bearish, engulfing. You can get all those information on that number 8 bootcamp video. So this candle is like this is the tweezer top, that means next candle bullish going up. Tweezer bottom, that means tweezer top, the tweezer candle, this will be on the top and this will be on the bottom. Sorry for that confusion. Okay, so do you have any questions regarding these candles? Basically the tweezer top and tweezer bottom, they are with same volume with same price level, same yep.
So what it indicates for us?
This will indicate the reversal. Okay, reversal of the market.
Okay, got it. So if the bearish is first and the bullish is on the right, so the reversal is it will go into red or it will go into blue now?
You will see this candle, like the market come down, you will see this pattern, and the market go up like this.
Okay, got it. Yeah. Okay.
That is why this is called the tweezer bottom, because this is in the bottom of the market and
Got it. Got it.
on
Yeah.
the top of the market.
Got it.
Boom,
Yeah.
boom. Okay.
And again, the rules remains the same, right? We'll wait
Yeah,
for
rules remains the
Equinox.
same. Okay. Yeah, definitely, bhai. Rules remains the same. We should stay on the rules. We should never try to change our rules, because the rules will make us patient. Rules will make us discipline. That is how we are going to win in this market. So next point of interest, I will quickly go to the price accumulation zone. Price accumulation. Okay. This accumulation is the, when the price moves like this, like bearish. Sorry, the bull candle, the little red candle, and the bull candle. Similar case, bearish candle, bull candle. Bull candle will be blue, and like this. This is called the price accumulation. Okay. Again, rules same. 50% of this price accumulation is your zone. Okay, the 50% of price accumulation is the zone. The price, whenever this is, this is when does it happen? It's your price come up, and price will, try to be in that zone for the longer time. Okay, the price will be compressed, and what will be the next move? The price will explode. Okay, the price will explode by making this kind of pattern. Like if this is going up, the price can make this big candle like this and goes up, and again come back to this zone 50%, and we enter the market. Whenever you see this price accumulation like this bearish type, this will explode to the bearish bias. The price will come like this and again go up and be in the 50% zone, and we enter here. Or we can make this as a premium, the take profit zone. Okay, whenever you see the market, like here you enter the market. Okay, you enter the market over here on sell. You enter the market like here, and you see, okay, I have this kind of zone on the left hand side. My take profit will be there. Okay, because in this zone the price has the price will react to this zone. The price will react to this zone. Sometimes the price will come off, bounce back, or the price will reaccumulate here in this kind of zone. That is where you want to get out of the market, because you don't know, the price can come up, or the price can reaccumulate. Whenever it accumulate, it will induce the buyers and sellers all the time. That's the zone where you want to get out of the market. Okay, so all right, so this was the price accumulation. So any questions regarding this similar drill? We entered in the 50% of this accumulation zone. Any questions?
No, I'm good. Thank you.
Okay, so basically we are today dealing with the point of interest. Okay, whenever you see these kind of patterns, this is our point of focus. We need to focus on those zones. We need to focus on those price levels. We need to see the proper price actions happening in those zones, so that we can enter into the market. So the next point of interest is the imbalance zone. The imbalance zone is very famous. Okay, the imbalance zone is like this. This has been a little bit crowded. Okay, so this is your imbalance zone. This is the imbalance zone. What does the imbalance zone means? That means there has not been the balanced price action. Okay, all the time the market wants to be in balanced way. The market cannot go straight down. The market cannot go straight up. The market should balance. Okay, those imbalance zone. So how do you identify those imbalance? Whenever you see for the imbalance, you will need the 3 candle. Okay, 3 consecutive candle. This can be blue. It can be followed by the bullish candle. Okay, or there can be all red candle 3 or blue, or it can be followed by. Okay, let me take this here like this. Okay, I will make. Okay. So this is your imbalance zone. See what happened for the bearish bias. The price come to this zone. Whenever the price came to this zone, there was an immense selling pressure. Only sell. Whenever there is only sell, that will make our the market imbalance. Okay, so in order to make the market balance, the market tends to come back to the zone again. The market tends to come back to this zone. Okay, so there might be questions. So how do we react to this kind of zone? See the wick, the first candle for the bearish, the up candle, the down wick, and the third candle up wick. You can see there is the zone in between there. This kind of zone. You can see there's a zone here. Okay, so that is our imbalance zone right here. The first top wick of this bull candle and the third candle down wick. Look at this big imbalance. Whenever you see this kind of imbalance, the market tends to come back to this zone to fill up this imbalance. Let me draw here. Okay, whenever the market come down, the market will try to come up, straight come up. Okay, fill this zone and come down. That means it will make another wick over here, another wick. Okay, boom, like this. Whenever it fill up the zone like by wick or the candle, the market is balanced now. The market is balanced in this case now. Okay, in this case, what is happening? Market immense buying pressure in here. Now the next move. Okay, it can take days to come back to this zone, but it will come back because these are the main target where the market wants to come back to the zone. Okay, so the next move can be like this, coming around, filling this imbalance zone, and can go up and finish over here. So you can see big wick like this. Okay, so this is how the market tends to fill the imbalance zone. Okay, guys, any questions? So this is how the imbalance will react in the market. Yes.
Yes. How do you know that middle candle is the imbalance zone?
I will show you in the live charts. Okay.
Yeah. So thank you.
Let's get into the live charts. Look at here. What is happening? Look at here. The imbalance zone. This is my 30-minute candle, 1 to 1 hour candle. Okay, always try to come to 1 hour candle. Look at here. Let's consider this small imbalance. Okay, so you can see this candle. Can you see this candle? This one?
Yeah.
This candle. Okay, the first candle, second candle, third candle. You can see there is gap over here. This is your gap. Can you notice this gap?
Yeah.
Right? Okay, this is your gap. The week to week is a gap. And the second gap, you can see here the second gap. What is here? This is the second gap. Okay. Beyond this, you can see what is happening. All the weeks, the market is covering all the week. You can see these are the balanced price action. Okay, so this kind of gap is the unbalanced price action, which is the zone of my, which is the focus zone. You can clearly see, here no gap. That is why there is not imbalance. Okay, so
if the gap is large, it means it's imbalance, yeah?
yeah, the gap is large, or the gap can be small like this, or can be large. Here,
Okay.
here, see here. What happened here? You can clearly see lot of buying pressure. Okay, lot of buying pressure. You could have jumped here. Okay. The market yen there is a lot of big candle. Let me jump in here, sell. Okay, sorry, buy. Boom. What happened? Lot of imbalance. The market came back and filled those zones. Your stop loss got hit, and oh my God, what happened? I tried to catch the market, but market give me knockout. So knockout blow. So that can be the knockout blow. So every time this kind of thing, the market will come back here. Now what happened here? Look at here. The market has filled up this zone. Okay, market has filled up this zone. Okay, so there is little bit of zone remaining. See here, the market has filled up the zone. Lot of zone covered by this wick. Now what is happening? There is still little bit of gap remaining. And again, while coming back, the market has made little bit of gap over here. Gap over here. So what will be the next move? The market tends to fill this gap up. But where is our imbalance zone next? Here. So market will try to catch this move. But this is my, this is my point of interest, my institutional candle, the big candle here. And I am going to enter the market on the 50% of this candle, right? 50% of this candle. Here I have marked 70 and 61.8. That is my premium price. Okay, why did I choose this candle? The main reason behind is whenever I go one time frame down, I can see what happened here. What is this? My point, another point of interest. Tweezer top, like a tweezer top here. Okay, in this case, what do we do? Look at here. What is here? The highs. What the market wants to do all the time. Market wants to grab those high. This was the last, the last buy candle before sell, and that is why the opening of the candle is my point of interest. And the next thing is whenever I move to 1 hour time frame, there is my institutional candle, the 50%. I'm going to enter here. Again, I don't want to go and jump in this here because this is just my imbalance, and I just don't want to trade on the imbalance. I want to make the imbalance zone as my TP zone, as my take profit zone. That is why. But here my take profit is this equal high. Okay, equal high. What is this? The money. Whenever you see these equal highs, those are the money, the double top, double bottom. What lies in the double top, double bottom? Your stop loss, your buy stop, your sell stop, that all lies in the double tops and double bottom. What does the bank want to grab? The bank want to grab those all. That's the money for the bank. Okay, that's the money for the bank. That is why the bank is always targeting those high and lows in the market. Okay, so this concept will help you to increase your risk to reward ratio, to find your optimum trade setups. Let us show you the another. Look at here. What is this? Bullish Morubuzu candle. This one, bullish Morubuzu. That means from here the market went up like immense pressure. Look at here, immense pressure. Now my next target, if this trade got activated on the 0.63200, my long-term target will be over that bullish Morbozu. And again, before that, what is there? Before that, there is an imbalance, the imbalance zone, big imbalance. The market come back and knock this imbalance and will come to the bullish Morbozu. That is my point of interest, where I take profit. And again, guys, whenever you are in more than 30-40 pips, don't forget to take partials. Okay, don't forget to pay yourself first, because taking partials is the payment for your payment for giving your time in this market. So optimum goal, optimum payment will be your TPs, but whenever you are 30-40 pips up, you need to pay yourself first. That means take partials and bring your stop loss to your entry. That will make your trade risk free. Okay guys, so I think that's all for today. Hope this has added a lot of value to you, because you can see, let me show you some of the last week trade setups which I completely messed up and missed, but that